Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, let's do an overall update on the stock market because, well, something is changing, or at least it looks like. Today the S&P is down 2%, the Nasdaq is down 2.15% as we can see over there. Obviously, we all know what is the main catalyst, basically this Evergrande crisis in China, huge property developer which is going bust. Obviously there is fear because we all remember what happened in 2008. I saw articles that they are already talking about a Chinese 2008 type financial crisis. Well, let's talk about that, and let's obviously take a look at the markets and at the stocks that we usually follow in the channel, trying to see important levels in case of a possible major correction happening. Should we be worried now, or we are still in a safe mode as of today? So, well, I'm gonna talk about that. The only thing I ask you guys, as always, is please leave me a like. It's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so first of all, let's start about this Evergrande crisis stuff. Now, I don't want to describe all the events. I know that there are lots of articles and YouTubers that they well described what is happening actually over there. Now, what I want to say is one thing. I heard and seen lots of people are already talking about 2008, the Chinese 2008 financial crisis. Now, 2008 obviously created a massive chain reaction, started from the United States and then went basically for the entire Europe and global markets as well. Can this be the same? And here is the main question, and just my personal opinion, no. Why is that? First of all, during 2008, the financial crisis happened because the entire banking system all around the world, or at least the western part of the world, were doing the same kind of shit, meaning that they were taking huge amount of leverage, giving away loans that they were clearly impossible to be repaid at some point. Now, the global banking system after 2008, especially in the US and Europe, went through lots of regulation. Now the situation is completely different for these kind of banks. So in terms of financial impact, this kind of chain reaction in the financial system, I don't see very similar stuff happening in this particular case. However, guys, what has to be said, and what, in my opinion, is the market fearing right now, is that China today is an extremely important global economy. Whether we like it or not, the world economy is heavily Chinese related, meaning that we depend a lot on China, because lots of corporations from the US, Europe, and stuff like that, they went to China to produce stuff because it was cheaper. And clearly, the thing is that if a sort of a housing crash happens in China with the, obviously that's a massive guy, $300 billion in debt. They have already said twice that they will not be able to repay it. So we are going to see whether the government will bail them out or at least save the situation. We know it is a communist country, so it's not like it always happens in the US with bailout. It's a little bit complicated, the situation over there. But the meaning is that, in my opinion, the market is afraid not of a financial crisis for all banking systems, but a potential economic crisis in China that obviously will have an impact on the global economy because lots of things are actually produced in China. So we already know, like, for example, the shortage in chips and stuff like that. Now, clearly, this could make the situation even worse. So this is, in my opinion, is what the market is really fearing right now. Plus, obviously, we have this week the Fed speaking about potential tapering. So you put lots of stuff all together, and clearly the market has too much uncertainty. And, well, you know what? The price goes down. So anyway, let's take a look at a little bit of technicalities, where we are right now and what can we actually expect. Is a correction started? Here, in my opinion, is where things become interesting, because when we take a look at the S&P 500, actually on a daily basis, you see how the S&P, first of all, it moves in these cycles, okay, all the times that basically since the pandemic bottom over there, we have had this massive bull trend. Look at that on a daily basis. And if you zoom in, you can see these kind of small cycles, which if you take the length of those in terms of days, they are all between 26, 20 days, okay? So an average of 23 days. So why I said that something is changing? Because on a daily basis, for the first time since the pandemic lows over there, we have that one of those monthly S&P cycle has just made a lower low compared to the previous one. Today, we still need the confirmation. The day still has to close, but on a daily basis, we have that the first monthly cycle has made a low, and then the new one is actually made a lower low. This has never happened since the pandemic lows. You can see this beautiful trend over there. And all the time, if you just open the graph and see those monthly cycle, you always have that the next cycle always closed above in terms of making a low. Compared with the previous cycle. Okay, this has always happened since basically here, March 23rd, which was one of the most famous days in the stock market history. Okay, so well, what does that mean? Obviously, is in pure technical terms, this is the first step for our retracement to happen. We make the first pullback, which breaks the previous lows. And then what is the most important thing to watch is not where it will end up making the low, but it is the next positive phase that it will do. Okay, and it will be extremely, extremely important. Why is that? Because the correction, maybe a major correction, or at least for a couple of months, can happen if in the next pullback that we will make from this move, the market is not able to break above, for example, the 50 moving average over there and regain those highs. Okay, if it fails to do that, then it is possible to complete the correction, okay, by forming another lower lows with a lower high. So this is why I'm telling you that today, for the first time, something has changed on a daily basis on the S&P 500. Clearly, as of now, this is just the first step. What can happen is that next week, the market will bounce back strongly, and this was just sort of a fake out. Anyway, well, yes, there is this possibility. So is this the beginning of a possible correction, like 10% on the S&P? Yes, let's say there is the likelihood. When we'll take a look at the Nasdaq, however, we can see that it is stronger than the S&P. The previous low was made over there with the old Afghanistan situation. We are still far away from that. We lost the 50 moving average, but I mean, it can still continue to basically move sideways and everything will be all right. Just a normal pullback of another cycle. As we can see over there, this is pretty clear to watch. So as of now, we don't have to freak out. We don't have to be worried, in my opinion. But, well, for the first time in the S&P, we are seeing something a little bit different. Okay, so just keep that in mind. And let's take a look now briefly at single stocks that we usually follow in the channel now. First of all, Tesla. As we can see, it broke this triangle over there this day on the 29th of July. And basically, since then, we remained stuck in this positive channel. And this negative day actually doesn't tell much. It's absolutely normal in the price action of Tesla. And the pullback can go back down until the 700 level over there. And now the truth is that for Tesla, as long as Tesla doesn't break those 50 and 200 moving average and this uptrend line, nothing is changing. This can be just a normal pullback to then continue to move up again. So I'm clearly holding the shares. I'm not buying more because in terms of fundamental analysis, I told you many times how, in my opinion, Tesla is not cheap at this price, but I obviously continue to hold, no problem. There is no need to freak out, in my opinion. A little bit more of a correction can happen if Tesla breaks this 700 level over there. Next steps would be 658. Then guys, obviously let's take a look at Palantir, another stock that I own, another stock that I made video. I was buying more over there. I love when Palantir gets in the low 20s, where in my opinion has a huge fundamental value long term. We see that Palantir amazingly just broke above this very important resistance over there, which was keeping Palantir below the 27 level actually since March 2021, and we broke that the previous week. Now what's happening today? It looks like it's just a pull back to actually confirm this breakout over there. So also on Palantir, do we have to freak out about this situation? No, okay, not yet at least, because as long as Palantir remains above this green area over there, which has just basically broke here 2 days ago, there is nothing to be worried about. It's just a normal pullback on what is now is a support, and it used to be a resistance. And well, the stock can continues to move up or even sideways for a while, but in terms of what the price of Palantir is doing now, no worries, in my opinion. Obviously, I would like to see Palantir cheaper prices just because I like to accumulate this long term. But anyway, no need to freak out on that. And in my opinion, it remains a stock to hold and a stock to buy if you can. When you have interesting pullbacks. The situation, however, completely changes when we take a look at Alibaba in the Chinese market. Alibaba, guys, which obviously I have a position in, but it's been one of the worst stocks, honestly, over the last year. Now, the Alibaba play, that fundamentally it's something that requires 5-10 years horizon. But as of now, it's just bleeding and bleeding completely. When we take a look at the price action, we broke everything. We broke the positive trend line that was going on and since 2018 on the 200 area over there. I told you many times how that was important. Indeed, as soon as we broke that, we just collapsed to basically 150. 150, which this orange area over there is an important support. If we break that, so far this can be considered like a sort of a double bottom, but if we break that, if we just lose this support over there, well, the stock can then move to $130 per share. We don't have too much to support the price if we break this 150 area. I'm not adding up, I just keep my position. As of now, it's just a falling knife. That's what it is. Fundamentally, obviously, it is cheap, but this old Chinese drama, guys, it never gets better. It never gets better. So just keep an eye on this level. If we break below that and confirm, well, Alibaba can definitely become even cheaper than that. Chinese market situation is very bad. And the most interesting part of it will be to see the impact that it will have on the S&P, in my opinion, and overall American market. So what I will do right now, obviously I told you I'm still holding these companies. I will buy more if the prices are getting cheaper. As you have seen, I told you the key levels. In my opinion, if we break those levels on those stocks, we can have cheaper prices. which is where I will very likely add more. The S&P situation, guys, something is changing. Let's wait for confirmations, but for the first time we can see that, technically speaking, the market is signaling over there a possible start of a correction. Let's obviously keep an eye on that. Let's see how this Chinese stuff will go on in the next few days. It's everything in the hands of the government, actually. They can decide how to end this. It's all about them, and obviously, because of the world is related a lot in China, also all global markets are feeling the impact of it, also European ones as well. So let's keep an eye on the situation, guys, and I hope you find the video interesting. Leave me a like, leave me a comment below, tell me what do you think about that. Subscribe to the channel if you want. As always, guys, have a wonderful day.